Every generation thinks they had it the hardest. Boomers blame inflation. Gen the 10th blames layoffs. Millennials blame student loans. Gen Z blames housing prices. But here's the uncomfortable truth. Every generation made one financial mistake that cost them billions of dollars. Not because they were lazy, not because they were stupid, because they believed the financial advice of their time. Let's go through every generation and see which mistake you're still making today. Boomers, born 1946-1964. For many boomers, the biggest financial mistake was believing that their home would always be their retirement plan. For decades, home prices climbed. It felt like real estate could only go up. Many homeowners poured nearly all of their wealth into one asset, their house. But a house isn't income. It still needs taxes, insurance, repairs, and maintenance. When retirement came, many discovered they were house rich but cash poor. $1 million home doesn't pay grocery bills unless you're willing to sell it. Diversification matters. No single asset should become your entire retirement strategy. Gen the 10th, born 1965-1980. Generation X entered adulthood believing loyalty to one employer would pay off. Many stayed with the same company for decades. The problem: modern careers don't reward loyalty the way they once did. Research has consistently shown that workers who strategically change jobs often experience faster wage growth than those who stay in the same role for many years. Many Gen the 10th workers waited too long to negotiate salaries or pursue better opportunities. The lesson isn't to switch jobs every year. It's to know your market value and negotiate accordingly. Millennials, born 1981-1996. Millennials inherited one of the largest student debt burdens in American history. But debt wasn't the only mistake. Many delayed investing because they believed they needed to become debt-free first. They waited. 5 years became 10. And they lost something money can never replace: time. Compound growth rewards people who start early, even with small amounts. Waiting for the perfect financial moment often costs more than investing imperfectly. The biggest mistake wasn't debt, it was delaying the habit of investing. Gen Z, born 1997-2012. Gen Z has unprecedented access to financial information, but they also have unprecedented exposure to financial noise. Every day, someone on social media claims they became wealthy through crypto, day trading, dropshipping, or the next viral side hustle. The result? Many young investors chase excitement instead of consistency. They jump from trend to trend before giving anything enough time to work. Real wealth is usually boring. Automatic investing, emergency savings, long-term ownership. Those rarely go viral, but they quietly build wealth. The common thread: every generation believed one financial myth. Boomers trusted housing. Gen the 10th trusted employers. Millennials waited for the perfect time. Gen Z trusts social media too much. Different mistakes, same outcome. Believing someone else's financial story instead of building their own. Your generation doesn't decide your financial future. Your habits do. The best investment you can make isn't chasing the next trend. It's avoiding the biggest mistake of your generation. Because in 20 years, the generation after you will probably look back and wonder, how did they fall for that? Subscribe,